question right now, what to do with your 401k, those investments, because we know the stock market has not been looking good the past couple of days. Here's a live look right now. Actually, we know yesterday, according to the Wall Street Journal, the stock market lost $3.1 trillion in market value. The Dow was down, the NASDAQ was down, the S&P 500 was down. The largest one-day decline in market value since March of 2020. That obviously going back to COVID. So what to do? What do you do? What do you need to know? Joining us live now via Zoom is Joe Bert, who is a certified financial planner, the chairman and CEO of Certified Financial Group in Altamonte Springs. And Joe, we really appreciate you joining us this morning here on Fox 35 News Plus.
Good to be with you, Garrett.
All right, so the first question I have for you right now, and that is, should people be worried right now?
Absolutely not. Yeah, this is typical market stuff. The problem that we've had, Garrett, is that things have been smooth for too long, and people forget that markets go up and down. And the market has been a little overpriced recently. You know, we all know what's going on with what we call the Magnificent Seven, which has run up the S&P dramatically in the last couple of years. But the market has been smooth for such a period of time. And when we run into some turbulence like we have right now, people think the world is coming to an end. But what's exacerbating it really right now is the tariffs and the uncertainty that those tariffs provide. That does not mean that the financial world is coming to an end, despite what some pundits might think.
So this reaction we're seeing right now, I mean, so far today, looking very much like yesterday started
Right.
as well. Do you expect this, even if these tariffs remain in place, do you expect the market to settle down and rebound at some point?
Without question, it always does this, regardless of what's going on in the world. Something unexpected occurs. Like, look at COVID. I mean, that came out of the blue, and boom, we had that. And that was a situation where we thought the world was going to come to an end for all of us. And the markets do recover because these companies will continue to exist and they will come back. The worst thing that an investor can do right now is to bail out, because you don't have a loss until you sell. And that's for sure. And the worst thing you can do on top of that is try to time the market. People that are trying to figure out, is this a good time to get out, are making a big mistake. I can tell you it's a great time to be in. You know, as I said time and time again, the stock market is the only market that when things go on sale, people run out of the store. And this is the time to be buying. What we're doing for our clients right now is buying, and we're rebalancing their portfolios. We're selling what's been up, taking profits, and buying what's down. So when the market does correct, you've taken advantage of it. And that's what people need to do. But unfortunately, we're human beings, and we make emotional decisions instead of rational decisions.
What about folks who are pretty close to retirement, Joe? We're looking at those 401ks right now.
Sure. Yeah, we've got a lot of those. In fact, we have a lot of folks in retirement. The key to success long-term in investing and to get your money to grow is to have money set aside that you know that when the bills come up or you have things planned, you don't have to cash out of your investments. You shouldn't be 100% invested in stocks, particularly if you're at or near retirement. What you want to do is have a cash reserve. You know, the typical bear market lasts less than 10 months. And what you want to have is cash reserve. So when you need cash, you're not selling your investments when they're down, because they do recover. And that is really the key to success. You don't want to sell when things are down, and you want to have cash reserves. The mistake I think some people make is they're either all fully invested or they're not invested at all.
Is the advice any different for folks who maybe aren't close to retirement right now but have a long road ahead of them?
Sure. The advice is buy. These are great buying opportunities, because you'll look back 3-5 years from now and say, geez, I wish I would have got in. I mean, look at what happened during the pandemic. How many people ran from the sidelines and never did get back in? That was the time to buy. If you believe the world will continue to evolve, and people will continue to need cars, people will continue to need washing machines and tires and computers and Apple phones and all the things that we buy, and they need food, all the things that make the world go round. If you think that demand will continue to be there, you want to own that stuff. And this is the opportunity to buy it. The worst thing you can do is to sell when things are down. Don't look at your 401k statement. Don't be looking at your investment account. If you're managing yourself, this is the time to be buying stuff and not selling.
We hear talks and some fears from some corners about a possible recession heading this way. What do you make of that, and what preparations should investors or people make thinking about the possibility of that?
Well, I remember it wasn't too long ago, a couple of years ago, we were talking about a recession, and the question was it going to be a hard landing, a soft landing, or whatever? It appears we had no landing at all. So, the pundits will always have something to say. It's opportunity to sell airtime and to get people to tune in like they do to this program, and I understand it. But believe me, I don't buy into that. If you're well diversified with quality investments, in the long run, you're going to be fine. What you don't want to do is be speculating. And I think people need to understand, Garrett, there's a difference between investing and speculating. Investing is a long term, and I'm talking about a period of 3 to 5 or the rest of your life. Speculating is what you're going to do on a day to day, month to month, minute by minute basis, which some people do on their phone. That's pure speculation. That's totally different than what most people should be doing, what we do for our clients. When we work with our clients, it's having a plan and deciding how we're going to get there with quality investments that are diversified over time.
So just bottom line it for us, Joe, what you're telling your clients right now when they ask you these same questions.
Bottom line is, I'm telling them this is the opportunity. If you have cash sitting on the side, we want to get it to work now. Get it in the market when things are down. Unless you think the world is coming to an end. If you think that's the case, you got to take your money and bury it in the backyard. I have a saying, Garrett, that if dieting and investing were easy, we'd all be skinny and rich. And investing is not easy because we're emotional and we make those emotional decisions. And that's why, unfortunately, most people are poor investors. You can't let the emotions overtake you. If you believe that the world will continue to evolve, it's never a smooth straight line. It never has been, never will be. And this is the bitter pill that we take to get good long-term returns. We got to accept the fact that there will be times when we have this kind of stuff. Ignore it. Don't look at it. And you'll look back in maybe a month, even a year or 2 years. And as I said, if you need your money in the short term, you ought to not have everything invested. Have some money in cash so you don't have to sell when things are down. It's
Bert,
not that complicated.
Yeah, good advice. Great advice, Joe. Joe Bert, certified financial planner and the chairman and CEO of Certified Financial Group in Altamonte Springs. We really appreciate your advice and appreciate you joining us this morning here on Fox 35 News Plus.
Thank you, Garrett. Good to be with you.